Everyone believes XRP already had its time. They study the chart, they examine previous cycles, and they decide the narrative is over. But what if that belief is exactly the mistake? What if XRP has not even begun its true move yet? Because once you remove the noise, the influencers, the forecasts, and the daily price candles, what remains is something far more critical: positioning. And right now, XRP is being positioned, not advertised. Welcome back to the channel. If you've been here for some time, you already understand this isn't about hype. This is about recognizing what's happening before it becomes obvious. Make sure you're subscribed. Press the like button because the algorithm rewards interaction. And honestly, those who notice things early are usually the ones who benefit the most. This is not about chasing candles. This is about reading intent. Here's the twist almost everyone is missing. Ripple, the company behind XRP, has never been valued by public markets. Let that sink in. For more than a decade, Ripple has operated within private valuations, closed-door partnerships, institutional pilots, and regulatory discussions. There's never been a point where Wall Street was forced to assign a transparent value to Ripple's balance sheet, revenue channels, strategic assets, or long-term role inside the global financial system. And that matters far more than most people realize, because when a company like Ripple eventually goes public, whether through an IPO or another structured method, everything changes. Wall Street doesn't speculate the way retail does. It audits, it dissects, it models, it demands clarity. And when that happens, Ripple doesn't get repriced alone. Everything connected to Ripple gets repriced alongside it. XRP is not separate from that equation. It sits directly inside the blast radius. This is why the current silence should worry you, not comfort you. People keep asking why XRP isn't moving like everything else. And the answer is simple: because it isn't meant to. Assets being accumulated quietly rarely move loudly. Liquidity builds in silence. Positions are established when sentiment is low and conviction is weak. That's how real money operates. Even traditional analysts are starting to say the quiet part out loud. Once Ripple's valuation becomes clear, significant gains are expected. That's not crypto Twitter speaking. That's institutional language. That's the phrasing you hear before re-ratings, not after them. Wall Street doesn't front-run what it doesn't understand. It waits for structure, paperwork, and regulatory clarity. Until then, price remains suppressed by design. And this is where timing becomes everything. What if the delays around Ripple's next phase aren't uncertainty, but strategy? What if Ripple doesn't want to enter public markets during chaos, but instead at the precise moment regulation, institutional access, and liquidity align? Because when that bell eventually rings, you don't just reprice Ripple, you reprice the ecosystem tied to it. XRP isn't lagging, XRP is loading. And that distinction matters. Markets don't reward impatience, they reward preparation. The most dangerous stage of any move is when nothing appears to be happening, because that's when positioning becomes most asymmetric. When the narrative flips, it doesn't ask permission. It moves violently. This is why tomorrow matters. Not because of a single candle, a single announcement, or a single headline, but because we are approaching the point where silence turns into structure. And once that happens, the window for positioning closes quickly. Here's the uncomfortable truth most people still refuse to face. Ripple has never been priced by the public market. Not once. For over a decade, Ripple has existed inside a private valuation environment, private funding rounds, private balance sheets, private partnerships, and closed-door negotiations with banks, regulators, and governments. That alone makes Ripple fundamentally different from nearly every other crypto narrative it's compared to. When someone says XRP is already priced in, they're revealing they don't understand how markets function. You can't price what you've never seen. Public markets price transparency. They price audited revenue, liabilities, growth paths, regulatory exposure, and strategic optionality. Ripple has never been under that microscope, and that matters immensely. Think about how Wall Street behaves. Institutions don't speculate like retail. They wait. They demand structure. They require filings, disclosures, compliance frameworks, and legal clarity. Until those boxes are checked, capital stays sidelined. Not because the opportunity doesn't exist, but because the mandate forbids engagement. That's not fear, that's discipline. And that's where the IPO conversation becomes unavoidable. An IPO doesn't just list shares, it forces valuation discovery. It compels analysts to model revenue streams, custody flows, payment volume, stablecoin exposure, treasury activity, lending infrastructure, and yes, XRP-related dynamics. Once that occurs, Ripple stops being an abstract crypto company and becomes a measurable financial infrastructure firm. That reframing alone is seismic. This is where timing matters most. Ask yourself why Ripple would rush into an IPO during regulatory chaos, incomplete rulemaking, or fragmented institutional readiness. They wouldn't. That would be irresponsible. A public listing during uncertainty caps valuation. A listing during alignment multiplies it. Now observe the environment forming. Custody rules are clarifying. Stablecoin frameworks are locking in. Banking access is opening. Institutional-grade lending is being discussed at the protocol level. ETFs are absorbing supply. Payment corridors are scaling quietly. This isn't random. It's sequencing. And sequencing matters more than speed. Markets accuse Ripple of delays. But delays only exist if you assume speed is the goal. If maximum repricing is the goal, patience becomes strategy. You don't ring the bell until conditions ensure the repricing sticks. Here's what most people miss. When Ripple is finally priced, XRP won't be evaluated in isolation. It becomes part of the broader discussion. Analysts will ask questions that haven't been publicly modeled. How does XRP interact with liquidity provisioning? How does it reduce balance sheet friction? What happens when it's used as collateral? How does it behave under regulated lending structures? What does demand look like when payment volume isn't speculative? These questions aren't answered on Twitter. They're answered in prospectuses, earnings calls, and institutional research reports. And here's the quiet irony. The same people calling XRP dead will act shocked when repricing occurs, not because it appeared from nowhere, but because they mistook silence for irrelevance. Wall Street doesn't shout while positioning. It whispers, files paperwork, and waits. This is why price suppression narratives miss the point. It's not suppression, it's non-participation. And that's entirely different. When institutions aren't allowed to engage, price stagnates by default. Once they are, repricing is violent, not gradual. The IPO isn't a candle event, it's a gravity event. It doesn't create value, it reveals it. And when that happens, everything tied to Ripple gets pulled into the valuation discussion, whether the market is ready or not. That's the elephant in the room. Ripple hasn't been priced yet. And when it finally is, the market won't debate whether XRP deserves attention. It'll scramble to understand how it missed the setup while staring at charts. That isn't hype. That's how capital markets work. Here's what most people misunderstand and why XRP looks broken to chart watchers. When an asset is being prepared for institutional integration, price action isn't supposed to look exciting. It's supposed to look frustrating, sideways, dead, annoying. That's exactly how XRP has looked, and it's not accidental. Look at the broader market. Fear is everywhere. Bitcoin outflows are massive. Ethereum is bleeding. Multi-asset funds are negative. Yet XRP is attracting nearly $63 million in inflows. That doesn't happen because retail suddenly got excited. Retail buys green candles, not red days. Institutions do the opposite. They position early, quietly, when no one is paying attention. This isn't hype volume. This isn't meme behavior. This is capital rotating before the narrative flips. Historically, this phase is the most dangerous part of a move. Not because price is high, but because conviction is low. People assume nothing is happening because price hasn't moved. But markets don't move when news breaks. They move when positioning is finished. XRP has always moved last. Bitcoin goes first, Ethereum follows, then capital searches for infrastructure exposure. And when XRP finally turns, it doesn't grind upward, it explodes. Because capital that already cycled through Bitcoin and ETH has nowhere else to go, it compresses. That's why XRP's moves are violent, fast, and unforgiving to anyone waiting for confirmation. And here's what most miss. XRP is no longer treated as speculative by serious money. It's treated as future financial plumbing. On-demand liquidity volume exceeded $15 billion in 2024 alone. Asia-Pacific corridors dominate usage. 40% of Ripple's partners actively use XRP, not just messaging. Payments, addresses, and on-chain activity are rising while price remains flat. That tells you everything. Price lags because infrastructure is being built quietly, And infrastructure assets don't advertise. They prepare. Now consider the shift almost nobody is pricing yet, XRP lending. This is where XRP stops being only a payments asset and starts behaving like productive capital. The XRP ledger is moving toward validator-governed institutional-grade lending, not DeFi chaos, not yield farms, not anonymous leverage. We're talking fixed-term, fixed-rate credit structures with compliance, risk isolation, and protocol-level oversight. This is traditional finance logic rebuilt on-chain. Institutions chase yield, predictability, and regulatory clarity, not pumps. If XRP lending is approved at protocol level, possibly by 2026, XRP doesn't just gain another use case. It changes categories. It moves from speculative digital asset to financial infrastructure generating return. That's a massive shift because once an asset can be held, settled, and lent in regulated structures, it competes with bonds and short-term credit, not meme coins. Valuation frameworks then change entirely. Add stablecoins to this. RLUSD isn't a side product, it's a liquidity engine. Stablecoins fuel XRP's role as a bridge asset. As more regions adopt regulated stablecoins, dollar, euro, yen, real, XRP becomes the neutral settlement layer. That's where the flywheel begins. More stablecoins increase settlement demand. More settlement locks more XRP in utility. Less liquid supply thins order books. Thinner books increase price impact. Rising price attracts institutional products. The cycle reinforces itself. That's structure, not hype. That's why BlackRock talks about digitizing traditional assets, not buying crypto. They're signaling integration, not speculation. When firms managing $13 trillion speak that way, they're addressing governments and regulators, not retail. XRP isn't trying to win a cycle, it's trying to survive the transition. Assets that survive transitions don't need hype. They need positioning, persistence, and regulatory endurance. XRP already has all three. This is where honesty matters. Strip away emotion and short-term obsession. And XRP isn't a promise of instant wealth. It's a long-term positioning play within a rebuilding financial system. Nothing reshaping infrastructure moves fast on the surface. It moves quietly, legally, methodically. You don't see fireworks early, you see paperwork. That's where XRP is. Price frustration mirrors institutional comfort. Uncertainty is being removed, piece by piece. XRP doesn't need total dominance. It needs consistent expansion, corridor by corridor, institution by institution. Compounding looks invisible until it isn't. Price isn't the signal now, behavior is. ETF inflows during red markets. Lending infrastructure, regulatory progress, payment growth, alignment. That doesn't guarantee success. Price can still drop. Volatility can still happen. Weak hands can still get shaken out. That's how positioning phases work. Historically, the most important assets look boring before they matter. If you want overnight moves, you're early but impatient. If you understand infrastructure precedes price discovery, you're thinking structurally. By the time the narrative is obvious, asymmetry is gone. That doesn't mean blind holding. It means knowing why you're holding and what breaks the thesis. Markets exploit ignorance. This is not financial advice. Crypto is risky. You can lose money. Do your own research. Understand risk. Question everything. If you can't explain your investment without price targets, you're not ready. XRP's story isn't finished. It may not have started. Real shifts happen quietly. Loud moments come last. If you understand that, you're ahead. That's all for now.